Sherry Cooper is with us to get some reaction to the jobs report. She's the chief economist at Dominion Lending Centers. Sherry, I'm going to start going through some of the details here, but just your headline reaction to such a steep miss.
Wow.
Yeah.
I'm shocked and disappointed and wonder, is there possibly something weird going on here? But, you know, could it have something to do with the election layoffs? Maybe not, though. One thing that does occur to me is that as all the banks announced their earnings, all of them had significant severance write-offs. And all of them were telling us that they've been laying off workers. And maybe that's a part of this. But obviously, this big jump in unemployment is very much unexpected. And it sure does bode ill for the Bank of Canada's belief that the Canadian economy is very resilient and no need to cut interest rates going forward.
If you're just joining us, we're covering this breaking news of the Canadian economy shedding more than 70,000 jobs in the month of November. The expectation was that Canada's economy would create 10,000 jobs. And to Sherry's point, this has been a week where we've heard about a resilient Canadian economy. The Bank of Canada kept interest rates on hold based on that. One of their deputy governors saying as much yesterday, and that actually was helping the loonie in performance this week. This is the largest jump in the unemployment rate, by the way, when you look at sort of monthly performance since 2009. The weakness, just as we go through some of the issues here, some of the losses in the month were in public administration, which saw a pickup last month due to election-related hiring. You might recall when we were reporting on the October number,
right,
we were looking at the full-time, part-time breakdown. There was a lot of part-time creation, and some people were looking to election hiring there. We did just get through that CN rail strike, and I'm going to have to look through in more detail on whether that was a factor as well. But we've seen this reaction immediately in the Canadian dollar, which had been trending higher this week on this idea of resilient Canadian economy. Does a single report, do you think, change that narrative?
Well, a single report is never to be taken as be-all and end-all, but this isn't a single report because the October number was weaker than expected as well.
Yeah.
Unless there's some exogenous force here, and the CN rail strike may well be a part of it, then you certainly can't ignore this number. I was wondering why the Bank of Canada's statement this time was so dovish. It sounded like they thought, you know, all's great in the future, global economy is rebounding, nothing to worry about, no reason to cut Canadian interest rates. To me, that was a little too optimistic, particularly given the threats from Washington to increase tariffs, not just on Canada, but on Argentina and Brazil, as well as, of course, China. So this may be the beginning of some bad news.
All right, I'm just going to go through some of the more in-depth information surrounding why we saw such a big decline in jobs in the Canadian economy in the month of November, when the expectation was that we were going to see some job creation. Looking at different sectors, goods-producing industries shed more than 26,000 positions. In the agriculture industry, there was some job creation. Natural resources down 6,500. Manufacturing, and we've talked about some of the challenges for manufacturing on both sides of the border. That group shed more than 27,000 jobs. But service producing, you would think that would be an area where the economy could see potentially some growth. We saw 44,000 jobs shed in the service producing industry, which is interesting. And just looking at that compared to October, Sherry, when there were almost 40,000 jobs created from service producing industry.
I'm wondering where the CN rail numbers would show up. And there are service jobs at CN Rail. I think Stats Canada has to give us a bit more flavor on what exactly this all means. The wage increases were quite good. You know, I don't think that this means the end of the expansion, but it is a bit troubling.
So if I continue to go through these numbers, and if you're just joining us and you see that reaction in the Canadian dollar, which is weaker against the U.S. dollar, we got that big jobs report for the month of November, and it showed a deterioration in jobs in this country. More than 70,000 jobs shed versus an expectation for 10,000 jobs to be created. Sometimes we like to look, Jerry, at the dynamics between hiring trends in the public sector and hiring trends in the private sector. We did see a noticeable decrease in private sector jobs, 50,000 versus a decline of around 2,000 in the public sector. And then just to break things down even further, because we talk sometimes about employees versus self-employed, a decline of 52,000 in employees versus the self-employed group being down 18,000 or so. I guess if we were to step back for a second, and we're still talking about a year where there was a lot of jobs creation. I mean,
right.
Certainly the Bank of Canada could look back at what he had seen up until the month of November. Lots of jobs created, and even looking at the increase in wages year over year of 4.4%. That's a little lower than expectations, but if I go back a month ago, we were looking at a 4.4% increase, and we were saying, oh, wow.
That's
Finally,
great.
You're starting to see a pickup in wages because there's fewer people available in the workforce.
And better than in the United States. So the 4.4% increase is certainly a positive. We know we're close to full employment, even with this jump in the unemployment rate. There just seems to be something fishy about these numbers because the unemployment rate increasing from 5.5 to 5.9 is really an exceptional gain, and often there's just some quirky thing in either the seasonal adjustment factors or the numbers themselves for the month of November.
Yeah, I'm just taking a look at the provincial breakdown as well, because we haven't gotten to that yet. And as I look at the month of November, and we just reported the headline number being a decline of more than 70,000 jobs, most of the jobs shed were in Quebec, which is interesting to me. Just on the surface, because there's been this story about how the Quebec economy has been outperforming. Heck, we heard National Bank's quarterly results this week looking good there, but more than 45,000 jobs shed in the province of Quebec. Alberta shedding 18,000 jobs. Similar story in BC. There was still job creation, it looks like, in the province of Ontario at 15,000, but at the end of the day, Quebec, Alberta, and BC seem to be hit the hardest during the month of November.
And all of those provinces were impacted significantly by the CN rail strike. So there could be temporary factors that are impacting these numbers.
Just before you go, Sherry, I do want to come back to the U.S. jobs report, because we're obviously watching the broader trends in the market right now, and the fact that you have a better than expected private sector job creation story, full employment story, and it looks like you're also seeing the wage story really pick up, hourly earnings rising 3.1%. That topped estimates. So we initially saw stock futures spike on that news. I think if we're looking at we're taking a look at the futures contract on our screen right now showing some noticeable strength here. And we have to add to the Canadian dollar weakness story against the U.S. dollar. It's strong U.S. jobs report, weak Canadian report, so that factors into the currency story. But what would you say about what's happening with the U.S. economy in what's been a topsy-turvy week with a lot of rhetoric on the story of trade?
Right. Well, I think what's really important is the Federal Reserve meets next week, and they're certainly not going to cut rates again. They've cut rates 3 times. Certainly the Bank of Canada has been the opposite in holding rates for the entire year of 2019. The Fed wasn't expected to cut rates, and undeniably they will not do so. The U.S. economy has been doing all right, although things can change on a dime if we see an escalation in trade tensions, and it does appear comments from the White House suggesting that an escalation may well occur. The stock markets have sold off recently as a result of that. But the economic numbers for the U.S. were certainly positive this morning.
All right. So headline takeaway when you think about the Canadian economy heading into 2020, after seeing this jobs report today, Sherry? What would that be?
More caution. More caution. Bank of Canada, pay attention to this.
Do you think, I mean, there were still some, even with the Bank of Canada's optimistic tone this week, who were thinking at some point next year you're going to start to see rates moving the other direction. How would you feel about that?
I do think the bank will cut rates at least once in 2020.
All right, Sherry, thanks for breaking it down for us. Lots to consider on this Friday morning with that disappointing Canadian jobs report. Sherry Cooper, chief economist at Dominion Lending Centre, is joining us.